What if I told you there's a way to invest in real estate where your rent checks come from the government? Even when the economy crashes? Sounds like a dream, right? But here's the twist. That same opportunity can turn into a nightmare if you go in blind. Today, we're diving deep into Section 8 investing, what it is, how it works, and whether it's really worth it. There's one part investors rarely talk about, and it could cost you thousands if you miss it. So, stay with me. We're about to break it all down in plain English. Number 1. What is Section 8 investing, really? Section 8 is a housing assistance program run by the government. It helps low-income families afford decent, safe housing in the private market. Instead of living in public housing, families get a voucher to rent from landlords like you. And here's the wild part. Up to 70% of their rent is paid by the government directly to the landlord. Let's say you rent a unit for $1,500 a month. If your Section 8 tenant qualifies, the government might pay $1,000 straight to your bank, and the tenant covers the rest. This makes your rental income feel a bit more secure. Number 2. Why some investors love it. The biggest appeal? Reliable rent payments. When the economy tanks, traditional tenants might miss rent. Section 8 tenants? The government still sends your check. And in many markets, Section 8 will even pay above average market rent. For example, a 3-bedroom home that would rent for $1,800 on the open market might fetch $2,000 under Section 8 because of how voucher amounts are calculated. Another win. Low vacancy. There's usually a wait list of families needing housing, which means fewer empty months for you. Number 3. The paperwork trap. Now, here's what most beginners don't expect. Section 8 isn't exactly plug and play. The process is government-heavy. You'll need to pass an initial inspection, follow strict housing codes, and sometimes deal with slow-moving bureaucracy. Let's say you buy a rental property, get it all ready, and apply to accept Section 8 tenants. You might wait weeks, sometimes months, for the housing authority to process everything and approve the tenant. If you were banking on immediate cash flow, this delay can sting. Number 4. Tenant quality. Truth versus stereotype. Let's talk about the elephant in the room. Some investors believe Section 8 tenants will destroy their properties. But here's the truth. Not all tenants, Section 8 or not, are created equal. Yes, some landlords have horror stories. But others have tenants who stay for years, treat the place like their own, and even do small repairs themselves. Here's the trick. Your screening process. Just because someone is on Section 8 doesn't mean you skip checking rental history, income sources, or references, and you can absolutely deny an applicant if they don't meet your criteria. Section 8 guarantees rent, not peace of mind. You still have to do the work. Number 5. Inspection and regulation headaches. Once your tenant moves in, your property will be inspected regularly. Usually once a year, they'll check for safety, maintenance, and livability. And they are strict. If a light switch is loose or a smoke detector battery is dead, you fail too many times, you lose the voucher income. Some landlords love the accountability, others feel micromanaged. If you don't like rules, Section 8 might drive you up the wall. Number 6. Delays can hurt your cash flow. One downside rarely mentioned. You don't always get paid on time. Even though the government is backing the rent, payments don't always hit on the 1st of the month. Sometimes it's the 3rd, sometimes the 10th. If you have a mortgage due on the 1st, this mismatch can cause problems. And if you're dealing with your first Section 8 tenant, the initial payment might be delayed longer than you'd expect. You need a buffer. If your business plan relies on razor-thin margins and zero delays, this could sink your ship. Number 7. Maintenance standards are higher. With Section 8, you're not just answering to your tenant. You're answering to the housing authority. They want your property to be clean, safe, and fully functioning. Things that might slide with a regular renter, like a chipped countertop or squeaky door, could trigger a violation. That means more repairs, more inspections, more potential costs. But here's the upside. If you keep the place in good shape, you're less likely to face major issues down the road, and tenants may stay longer, knowing they have a quality home. Number 8. It's not for every market. Section 8 success often depends on where you're investing. In some cities, the voucher rates are generous. In others, they're below market rent, making it tough to turn a profit. For example, in parts of New York or California, you might make more money with a regular renter because Section 8 vouchers can't keep up with market prices. But in cities like Cleveland or Memphis, Section 8 might pay better than the open market. So always check the local fair market rent schedule before diving in. You can usually find it online by searching for HUD FMR plus your city. Number 9. Long-term tenants equal to long-term profit. One big advantage that experienced Section 8 landlords rave about. Stability. Families receiving vouchers tend to stay in one place for years. They're not looking to hop apartments every year. That means fewer turnover costs for you. No repainting, no advertising, no vacant months. For example, one investor in Chicago rented to a Section 8 family for 8 years straight. The rent increased slightly over time, and the unit barely needed repairs. Multiply that across multiple properties, and you've got a very chill, cash-flowing portfolio. Number 10. Can you actually get rich doing this? Here's where it gets interesting. Section 8 investing isn't a get-rich-quick scheme, but it can be a consistent, low-risk way to build wealth over time. Imagine owning 5 homes, each earning $400 per month in profit after all expenses. That's $2,000 a month in mostly passive income. And because the rent is government-backed, you're insulated from economic downturns that might wipe out other landlords. The real win. If you buy smart, use financing, and let tenants pay down your mortgage, you build equity. Year after year, you're not just collecting rent, you're building real wealth. Number 11. Landlord bonuses you didn't expect. Some housing authorities now offer cash incentives for landlords to take Section 8 tenants. It might be a $1,000 bonus per signed lease, or maybe they'll pay part of your renovation costs to bring a unit up to code. These programs vary by location, but they're growing fast, especially with the housing shortage in many U.S. cities. So don't skip checking what local bonuses are available. That one phone call could mean thousands in your pocket. Number 12. Real stories from real landlords. Meet Carla. She bought a duplex in Kansas City for $150,000. One side she rented on the open market. The other side, Section 8. The market tenant stayed 10 months. The Section 8 tenant stayed 4 years. Guess which side made her more money? Or take Malik in Atlanta. He bought a fixer-upper, spent $20,000 in repairs, passed the Section 8 inspection, and had a tenant moved in within 30 days. The rent, $1,800 per month, with $1,500 coming from the government. Now he's buying his second property. Number 13. How to get started. If you're thinking, okay, this sounds interesting, but where do I start? Here's your roadmap. First, research your local public housing authority. They'll have all the info on voucher amounts, requirements, and application steps. Next, choose a property that fits the standards. Safe neighborhood, clean layout, no major code issues. Then, go through the inspection checklist before you even apply. This saves time and headaches. Finally, screen tenants carefully. Remember, Section 8 is just a payment method. You still want renters who respect your property. And the golden rule? Treat it like a business, because it is. Number 14. You can still raise rent. Many beginners assume that once you're in the Section 8 program, your rent is locked in forever. That's not true. You can request a rent increase, but it has to be justified and approved by the housing authority. Typically, you need to give a 60-day notice and submit a formal request. If other similar units in your area are renting for more, you have a solid case. For example, if rents in your zip code jumped by 10% in the past year, you can show data to support your increase. Just make sure the new rent doesn't exceed the voucher limit for that unit size. It's not automatic, but it's absolutely possible to grow your income over time. Number 15. You can combine Section 8 with other strategies. Section 8 doesn't limit your creativity as an investor. You can pair it with other investing strategies to maximize returns. For example, you could buy a duplex, live in one side, and rent the other side to a Section 8 tenant. That's called house hacking. Your tenant's rent could cover most, or all, of your mortgage. Or, you could buy a small multifamily and fill multiple units with voucher holders, more rent streams, more security. Some landlords even buy fixer-uppers, renovate them, and rent to Section 8 families at premium voucher rates. Section 8 is flexible if you know how to work it. Number 16. There's less competition. In hot real estate markets, rental properties get scooped up fast. But Section 8 investing is often overlooked. Why? Because many investors don't understand how it works, or they're afraid of the red tape. That's your opportunity. You might find great deals that cash flow well because other buyers pass them up. Imagine this: two identical properties, one listed as Section 8 approved, the other as conventional rental. Most investors will chase the second one, but the first one could mean instant rental income backed by the government. Sometimes the less popular route is the most profitable. Number 17. Tenants take the program seriously. Here's something that surprised me when I first got into Section 8. Many tenants are extremely careful because they don't want to lose their voucher. It's their lifeline. If they damage a unit or violate lease terms, they can be removed from the program. That creates an incentive to be respectful, stay long-term, and keep the place clean. Is it true for every tenant? Of course not. But don't fall into the trap of assuming Section 8 equals bad behavior. In many cases, it's just the opposite. Number 18. You're helping solve a real problem. Let's get real for a moment. There's a massive housing shortage in the USA. Millions of families qualify for vouchers, but there aren't enough landlords accepting them. That means families are stuck in shelters, unsafe motels, or bouncing from couch to couch. By offering quality housing through Section 8, you're not just earning money, you're making a real impact. You're providing stability for kids who need to go to school, for single parents trying to work, for veterans trying to rebuild their lives. Sometimes, profit and purpose can live in the same space. This is one of those times. If you've ever wondered whether Section 8 investing could be your ticket to consistent rental income or a massive headache, now you know. It all depends on how well you prepare, research, and manage. So, is Section 8 investing worth it? You tell me, would you rather deal with strict rules and guaranteed checks, or fewer rules and more risk? Drop your thoughts in the comments. I'd love to hear your take.